Hey, everybody. Delighted to have Don Durrett back for a second time. We had him on before. We woke him up in the middle of the night to do it. We're a little bit more friendly this time. Don, here's the thing I really like about Don. Not only does he seem to have a very clear and salient macro take on where the world lies, he takes it further, and he's done some incredible fundamental research on the miners, which he has been predicting for a long period will go into a super overperformance period, which seems very much to be coming. In short, he's been accurate. He continues to be accurate. Don, we're delighted to have you back. Thank you very much for being available.
Yeah, Francis, thanks for having me on. We're two people that both have kind of an alignment with what's happening with the U.S. economy. And so, yeah, I really want to have this conversation. This will be good.
Let's start on that macro, Don. Give us your executive summary of where is the United States right now?
Yeah, so I follow you. I really like the way that you go into depth and into detail about the reasons why the U.S. economy is in trouble. And I've been saying this myself. And so it's great when I see somebody that's in alignment with me. The other person that's really in alignment with us is Ed Dowd. I mean, the three of us should all get together. So for me, I've been following... my hair isn't gray yet, but I'm actually 65 years old. I've been following this closely since 1980. I mean, I was 20 years old in 1980 when Reagan came into office. And I've been following the economy, the U.S. economy closely. And I've also studied economic history and what the U.S. has done, Austrian economics. I remember in 1985, I told my dad, I said, because at that time I was like, Reagan was having these deficits and the economy was growing. I told my dad, I said, we can't do this. This won't work. You do realize this. I mean, this is in 1985. So I was already on top of it in 1985. And so I had recognized that the U.S. had pivoted. So out of the 1960s, from 1945 to 1970, the U.S. was a mercantilist economy. And we were kicking butt. I mean, the U.S. was really envy of the world. We were generating wealth. Families were living in the early 60s. Families were living on $10,000 with one payer because mercantilism works. And then in 1972, Nixon took us off the gold standard, and we started going downhill. And the middle class started going downhill. We started closing factories. And then Reagan got into office in 1980. And everybody thought this was great. Reagan pivoted to globalism and everybody thought, oh, this is fantastic. We're going to make so much money, And in actuality, I'm like, whoa. You realize what they're basically saying, right? They're basically saying that we're going to go to a services economy, and the services economy is going to generate wealth. It's like, it was pie in the sky fantasy. And really what it was, what they pivoted to is exactly what we've got today, which is basically a bifurcation of society where you have the rich and you have the poor, and the middle class slowly gets hollowed out and then removed. And if Kamala Harris would have won, we would have kept going towards that socialism, right? Which never works. But the difficulty with capitalism is you're going to have winners and losers. And the people that do the best succeed the most, and the left hates that. And so socialism always arises because capitalism is not a fair system. We got to have a fair system. Everybody needs to succeed, right? Well, we don't know of an economic system where everybody succeeds. But I'm getting off of the macro here. So we got in the 80s, right? So Reagan, he pivots to globalism. When he pivoted to globalism, it was literally a death knell for the U.S. economy. And nobody's really kind of connecting the dots of what's happened from 1970 to today. It's progressively gotten worse and worse. And so as the economy has gotten worse and worse, what I mean by worse and worse is stability and growth, whereas you're going in the right direction versus the wrong direction. And everybody's now obvious to the fact. That's the reason why I got involved in gold. It's like, oh, you're going to go this direction? Fine. I'm going to buy gold miners. Have fun. And look what's happening, right? Gold's going up. The miners are going up. It was inevitability, right? So the 1990s, we started bifurcating. And we got kind of tricked, right? We got this technology boom. And that technology boom made it appear that the US was doing great. When underneath, the cancer was still growing. That cancer of the middle class was still getting hollowed out in the 90s, even though everything appeared to be on the surface to be great. It's history is rhyming with this AI. AI is going, everything's fine, everything's fine. It's not, right? It's history rhyming. We're having a bubble in AI, just like we had a bubble in IT and internet. And then at the end of the 90s, that's when the US, it ended. We peaked. The US economy peaked in 2000. Everybody needs to realize this. We peaked. And then in 2000, from 2004, so we had the dot-com bubble pop in 2000. In 2001, we had 9/11. Those two events together basically rug pulled the US. Since then, all we've done is live on debt. So in 2000, the national debt was $5 to $6 trillion. Today, it's 37. So all we've done is just live on debt, live on credit cards since then. But not only have we done that, but we've also pivoted to relying on the Fed to manipulate the economy, which is basically, that's not capitalism. That's just you're just inevitably, now you got Trump is buying shares in Intel. I mean, you can see this thing, how it's all spiraling out of control, right? And so then you have the Fed manipulating everything. So here, I'll kind of end it on this, how everything is getting just completely out of whack, is if you look at reverse repo, right? Reverse repo should flat out be illegal, right? The Fed was put in charge. When the Fed came into power in 1914, I think, when they came in, they were supposed to do two things, right? They were supposed to basically help with full employment and inflation. Reverse repo literally gives money to the banks. That's what it does. Yeah. It gives money from the Fed, who prints money out of thin air. They're literally supporting the banking system, and they're doing it on their own. They're subsidizing the banking system. They're paying the payroll of the banks. The way the reverse repo works is if you're a bank or a money market fund, either one, you give money to the Fed overnight. You say, here, I got $10. Here you go. Here's my money overnight. The next day you get your money back plus interest. And the Fed goes, here you go. Here's a little bit of interest. Where the hell does that money come from, right? It's literally QE, but it's manipulation of the economy. And, sure. and that's the slippery slope. And then they're like, if we can subsidize banks, well, then we can subsidize insurance companies. We can subsidize Intel. We can subsidize the whole thing. And so the whole thing is a slippery slope, and it's slowly point. Now, I'm giving you just an overview of how things are going in the wrong direction. But then if you look at all the current line, you don't know all of this stuff. If you look at all the current data points of the macro system of what's happening today, you can see that things are really, really unstable. I'm just going to name a few. I can't name them all. I can sit here and talk for an hour. But if you look at the market cap of the U.S. stock market, it's $63 trillion. Now, on the surface, you go, we earned it. We're there. That's all done through the market and all that. But when you look at the size of the U.S. economy, it's over 200% of GDP, which historically is way out of whack. It's a massive bubble. There's no way in hell that stock market deserves to be worth $63 trillion. Then if you look at the price to sales, it's 3 to 1. It's historically, it's 1.5. It's double what it should be, just like the size. So we got this massive bubble, right? It's a massive bubble, and everybody's really smiling. Everything's fine. And then if you look at the consumer, the U.S. economy is 70% consumer spending. The consumer's broke. The only reason why the economy has positive GDP is because we have a fiscal deficit of $2 trillion, and they're counting that money. And then you have transfer payments. 47% of all the spending in the U.S. economy is government money. 47%. And so that's all.
The halfway mark is communism, as far as I'm concerned.
Right. So yeah, exactly.
We're pretty close. That's not only an issue.
Yeah, I was talking about how the government is manipulation. You're right. We're on the thresholds of it. 47%. So all that transfer money it's like liquidity in the system. It keeps everything kind of afloat. So you have the top 20% who have money, and they're spending like crazy because they're wealthy, because you have all this money, that's flowed into the system, the $63 trillion, and their houses are worth more than they've ever been worth, and everybody feels rich, right? but the lower 50% is struggling, but the transfer payments keep everything going. But it's still a Potemkin economy. Like Steph Bonboy says, is riding on air. I mean, and everybody's kind of in denial. And so I'm going to end it here, and we'll have a conversation, is that Jeremy Siegel, they have him all the time. He's an economist. They always have him on like the closing bell. And he goes, "Oh, you can ignore the unemployment rate. That's a lagging indicator. We don't need to focus on that, right?" Well, guess what? It's the last shoe to drop. Yeah. When unemployment is starting to go down, you need to be afraid. And Siegel's like, "No, we don't have to worry about that. It's a lagging indicator." And that just tells you how the whole thing is just how we're basically being hoodwinked. We're not being told the truth of what is actually going on. But the whole thing, I mean, when you connect all the dots, you look at the macro picture, you look at all the weakness, you look at how things are trending. I mean, the only thing that's going to get this economy back on top, really, is lower rates and more liquidity, more debt, right? Low rates, more debt. In other words, all they can do is kick the can. But as they kick the can, things just get more and more unstable. You know,
they can't get the lower rates now because the debt market's turned, because there's no one who wants to buy it anymore at the price. That's what so many people don't understand. They just think they can start printing again. Well, printing means they create more money and somebody else has lent it to you. There still has to be a credit, even if you're going right to source where it's the Fed. And you go back to your repo markets example, where the Fed's paying interest to banks for overnight money that no one's using. It's creating new money, and that is inflation. And that interest has to be paid. For everybody who's borrowing, you have to pay that interest, and you're already drowning on an interest payment you can't afford to pay. And you've got all the stuff that's on cheap interest to roll onto much higher rates. So the affordability vectors are just absolutely terrible. That was a great opening statement, and I really enjoyed that.
I got to follow up on the debt thing. So we both agree completely that this is a doom loop. This is a debt bubble doom loop, meaning that once the debt gets too high, there's no way out, because at this point, you need money to pay for that interest. Yeah. And to get the money, you need more debt. And so so we're accumulating more debt than revenue.
And the more debt you get out, the less rare it is, and the more proliferated it is. So the greater yield you have to offer to the people who are going to buy the later debt, which means interest rates go up, which means overall the interest expense on all the existing debt before the new debt has all gone up as well. And so,
yeah. And we're not reinventing the wheel here with our arguments. This has actually been historically proven. Once a government gets debt above their GDP, above 120%, they never, ever in history, no government has ever come back from that without the debt blowing up. 100% of the time, you get to 120 and it's lights out. Okay. Well, guess what? We're there. We're at 120. So we're already in lights out. We're already there. So everybody kind of knows this. It's like, oh, now all we're doing now is going down the road of a reset. But it gets worse. It gets a lot worse. Because the U.S. is fragmented politically, we actually are not going to recover from this, because we won't have any political answers. So without any political answers, it'll just get worse. And so the end result of all this is really, really bad, in that we're going to lose America, which America has this beautiful constitution, beautiful countries, beautiful history, and we're getting ready to lose it, which is awful. America is heading down a path of breaking apart. And that's the sad part of this whole thing. That's the thing I don't like, but I have to bring it up, is that's the end result here.
Well, it's even harder for me because I just sound like some nasty foreigner with a foreign accent who's talking smack about a lovely people that I really enjoy, a beautiful country that I'm really sad to see be destroyed by the parasitic mercantilist classes that you mentioned. I get sucked into debates every now and then, and I want to show you a couple of points, and I want to get your perspective. This is more a discussion than a Q&A interview typical. because I'm such an active listener and you're such a great guest. I got in the debate, and the one person was saying that no, gold, the dollar's going to spike. It's the whole dollar milkshake thing, because of offshore money, and gold's going to collapse 40%, and that's when you should buy. In other words, you're in too early, you're going to take a massive red. And I'm like, no, I don't think it's going like that. And people are over fascinating. And I just want to show, I try to say, you need to write something down, because I find I have to keep saying the same things a lot of the time. And that's not to say there couldn't be, to some degree, a little bit of upside on in a peculiar death knell. But generally, the winner is gold in all of this. So I wrote a tweet, and I want you to critique my arguments here, because I make 4 points, and I'll go through them really quick, because we'll discuss them. And I want you to come back, agree, disagree, or anything to add, because I think you're a really interesting voice who's similarly aligned, and who probably wouldn't struggle at all to say, sorry, Francis, you're off there, or actually I would add to that. So the one thing that people aren't talking about is how deep is the carry trade, the yen carry trade. My suspicion is you have a casino. When you're sitting at the GDP, market cap to GDP rates you're talking about, the US stock market is the global casino. Not just the American casino, it's the global casino. You have the Swiss National Bank that has got literally a mobile hedge fund of tech stocks for all we, of grand scale. So many people have been borrowing in the yen for property. There's 30-year debt. There's all durations of debt borrowed in the cheap yen because of the 80s crisis in Japan that had seen them have ridiculously low rates. But nobody can put a number to that. I've yet to find someone. And it's kind of like the derivative market. When you have something that no one has even a quantum understanding of how big it is, suspect it's real big. It's kind of like the iceberg. If they can't talk about what's above the waterline, just know for sure what's below the waterline is an absolute continent. So when if we have the yen long rate going up, you could have so much money that needs returning to Japanese-based banks or brokers and intermediaries that have borrowed yen, suppressing the yen. Don't forget, when you keep borrowing yen, you suppress the yen by valuation, and you get the cheap interest rate. Then you go and speculate in the casino. We've got clear evidence that there is a dearth of capital. I call it capital saturation in the US stock market. We used to have it in the bond market and stock market, but now the bond market is slipping like a glacier into the sea, and people are starting to get aware of that. That's just caused an additional saturation into equities, because everybody lives in this binary world of the 60-40 portfolio. Only some and the central bankers are now moving into gold, and gold is now siphoning off a bit out of this. So, number one, how does the dollar spike if there's so much foreign investment capital and we have no understanding of the yen capital trade, yen carry trade depth? So I'd love your take on that. Number two, we had the Trump tariff tantrum in April. And when rates spiked up in fear about the future of America, the dollar collapsed. Everyone assumes that rates go up in America, the dollar strengthens, much like the tightening cycle. Britain didn't hike as fast, and they had a pound and pension crisis because bond money could flow out of gilts into the treasuries, get a higher yield, and the government there was trying to do a stimulus budget and was going to issue more debt. Instant slap in the face for Britain for that. When the Trump tariff tantrum occurred, we actually had rates up, debt got sold off, dollar got sold off, and actually it was US-based money. Initially, they tried to say, Japan attacked us. Then they said, no, it was China, etc., etc. It was shown to be major movement of domiciled American money going to other markets that were less overvalued. So you've got the most overvalued market. Surely the asymmetry is on capital leaving those markets and going externally elsewhere, not more capital that's been sitting on the sidelines from God knows where, all wailing in. I think everyone has the asymmetries wrong. The asymmetry is downside with minor, very minor upside, only based on dollar debasement, which we've shown you're up 7% before the 27% crash, but actually you're down because the dollar's down 11% since that time. So I'm interested in your point on rate spikes, everyone assuming the dollar goes up, when in actual fact, it's debt crash and it could be money flight capital on an already capital saturated nation moving out. Don't forget, we weaponized the SWIFT system to confiscate money, and that risk premium, which is my third point, hasn't fully been priced in. This financial system has become politicized. Tariffs, seizure, all of this. The full re-rating of America no longer being the rule of law, land of the free. And we had a very good gentleman in, and now his name escapes me, who's on the legal side, from the state side, that was telling me about the legalese and how we are continuing to move towards the threat of great taking to a far greater degree. So that's a third point. And then the capital saturation internationally, the asymmetry I've covered. And then the fifth and final point, where was it? Don't miss the investment into precious metals, because if you were told there's a 40% discount sale in a deflationary event, what's actually going to happen is you're talking about the reserve assets continued collapse of debt, and the only still standing in the room is gold. So actually, gold can go up on rate hikes, as it did in peak tariff tantrum when it hit 3,500. Come back at me on your take on the super death knell, because everybody suddenly thinks this is the most important thing to be talking about. Whilst even that theory, dollar milkshake theory, finishes with dollar wins in the end, my argument is it's winning already. It wins in the middle and the end, the beginning, middle, and end. And don't miss a chance to get it, because it's going to get harder. And unobtainium might come for silver and platinum as well. Go ahead.
Yeah, one of the reasons why I was excited to do this interview is the fact that me and you are kind of in alignment. And you go into the details. You go even deeper than me, and kind of sometimes take it off the train track with your details. But then I can come in and kind of support what you just said. Now, I had dinner with Brent Johnson a year ago at Beaver Creek, and I told him the reason why the milkshake theory doesn't work, it doesn't hold water, is because it's predicated on the fact that the U.S. economy is the foundation of the dollar. Without the U.S. economy being stable and strong, the dollar can't go up. So you can't have a milkshake theory if the U.S. economy falters. And he didn't say anything. He didn't come back and argue and say, no, don't, he basically didn't have an argument. He acknowledged, by not answering, he acknowledged that I was right, that the dollar's foundation is predicated. Now, the reason why the dollar went down when Reagan did his tantrum, because it weakened the economy. And it weakened the economy. Now, you mentioned about saturation in the stock market. Absolutely. And that saturation creates risk. You mentioned about the risk premium. We also have saturation internationally in U.S. treasuries as being collateral. So we have countries that are holding U.S. treasuries as reserves. And a lot of that money is used not just for reserves, it's also used as collateral in certain instances, if you will. So
it's a third, 30, but somewhere between 30 and 35% is international holdings. Yeah.
Yeah. So if the U.S. economy falters, like I believe it's going to falter, that money will flow out of foreigners. They're like, I don't want to be a hot potato. Holding U.S. treasuries and holding U.S. dollars will be a hot potato. People will be dropping them. So there's no way the dollar goes up. And that's what I said. So when the dollar, it went up to 115, and I said, because the reason why it went to 115 is because all these other countries were raising rates. And remember, Powell was very late to the game to raise rates. And that's the reason why the dollar went to 115. And then as soon as Powell lowered rates, the dollar went to 100, right? And that's exactly what I said was going to happen. It's like what makes the dollar go up and down in many respects is interest rates and risk, is exactly what you just said, the risk premium. So we have an inordinate amount of risk premium on the U.S. economy, and that reverberates through the whole thing. Yeah. And people don't realize that there's going to be an event. I don't know what it is. It's going to be the Bear Stearns Lehman event where the U.S. literally gets rug pulled. And what Trump did yesterday, what Trump's doing with tariffs, and I basically called this. I basically said that Trump, because everybody was calling him Taco Trump, Trump always chickens out. I mean, no, he's not. Trump is going to be hard on tariffs. He is not going to back down. He's going to have at least 15%, which is exactly what we're seeing. He just put 50% tariffs on India. He's having high tariffs on India, Brazil, and China, and Russia. All those countries having high tariffs. The BRICS.
And South Africa. Yeah.
Right. And he's rug pulling our number one and number two ally, Europe and Japan. He's rug pulling both of those economies. He's hurting them both. You don't get a free pass. He's hurting the global economy. He's also hurting the U.S. economy through these tariffs. Tariffs are not good. Tariffs are bad. Yeah. It's like, wake up.
Well, it's inflation. But that's what they need, because they need debt debasement. So he's pretending to do things for Americans while actually taxing Americans.
Right. But the core of it, the core of it is to raise money to create stability in the bond market. The bond market is the key to it all. Literally, the key to it all is the bond market.
And the trade deficits. He's killing the trade deficits. He has huge deficits with Europe and China. That's why he's also trying to kill that.
But it really comes down, and the reason why I got into gold is because it's all about the bond market. The U.S., you talked about, the saturation in the U.S. Stock market. That is all predicated on the U.S. economy. The U.S. economy is all predicated on the ability to borrow money. The U.S. government has to borrow currently about $2 trillion a year. Borrow $2 trillion a year. Well, that's the bond market, right? That bond market has to be stable. It cannot go fragile. The minute it goes fragile, the whole thing breaks.
And it has to roll $8 trillion.
Exactly.
On top of that $2 trillion. And it can't do any of it on the long end because it's far too expensive. So it's all going on short duration.
Yes. So it all comes back to the bond market. And I've said this for years and years and years, that the only reason you own gold and silver mining stocks, well, not necessarily gold and silver, but gold and silver mining stocks, the only reason you own them is because you recognize that the U.S. bond market is going to fail. It's going to fail. So you just buy them and wait, because eventually that thing's going to fail. And when it fails, and you mentioned this earlier, the one winner is gold, because where do you run to? You no longer can run to U.S. treasuries. That's where
you're not running to bonds in another country either, especially if you've just been burnt by bonds. You're not going, okay, tiny jet's great.
Yes.
You're not doing it.
Right. And one of the reasons why bonds in other countries will be weak is because the U.S. economy is 25% of global GDP. You rug pull the U.S. economy, you literally rug pull the whole world's economy, and all the bonds are basically leveraged. And so there's no place to run. You can run to local currencies, but if there's inflation, that's not a great place to run. So there's really going to be there's like 4 places to run, and 2 of them are really not that good. One is your local currency. The other one, U.S. treasuries, U.S. dollars. I mean, you could run there. Those options are not great. And that's where the majority of money will go, by the way. But the other 2 places that people will run to is gold and Bitcoin. Now it's Ethereum as well. Ethereum is basically kicking Bitcoin's butt this year. We could talk a little bit about that. I think that's a fascinating topic. I've been into crypto since 2016. I recognized it, and people have been skeptic, crypto forever. I did my deep dive. I actually have an IT background. I did my deep dive in 2016, and I was shocked. I was literally shocked at how elegant the Bitcoin software was. I was like, okay, they're making this currency, this cryptocurrency, right? I was a computer programmer, and I went and looked at it, and I went, holy crap. Whoever wrote this was a genius. The software is very elegant, which we've all found out to be true, right? I mean, it's a masterpiece. And so that's what
is it an NSA creation? CIA NSA creation.
Well, we could argue about that. I think it's Lynn Sassaman myself. Do some research on Lynn. I think Lynn wrote it. Lynn, he died 2 months after Satoshi disappeared. End of story. Mic drop. Because Lynn Sassaman, he was the perfect guy to write the code. He had all the abilities. He was basically friends with all the guys and all of the technologies. But if you read about Lynn Sassaman, I think he's the man. That's who knows.
Don't you find, Don, that's the fact that China and Russia have largely rejected Bitcoin? They get Bitcoin through confiscations and tax and various things, and are gone all in and on gold. That the BRICS have said, we're not trusting this thing. This looks like Yankee story. Too many American faces.
Yeah, but it's not
their conclusion. Look, they know that there's something going on in the crypto space and they're going to lead it. But I don't think it's Bitcoin. They want their own versions. They all want their own takes. They are wary of the dollar in stable coin format. They're going gold, and then they'll release their own. Can you feel that?
But it's not about Bitcoin. And I've always said this. It's about blockchain. Yeah. This is the reason why I got this. So I stopped buying Bitcoin a long time ago, and I started buying alts, and everybody calls alts S coins.
Yeah.
But I'm kind of a visionary guy. And basically the one thing I realize is that Bitcoin's a first generation blockchain. It's not.
When's the first generation ever the best generation, isn't it?
Yeah, it's not going to be the leader. The alts are going to pass it up. Now Bitcoin has a place, and it's going to be used. I don't know how long it's going to be around, but it's going to be used for collateral because the fiat system is collapsing, and Bitcoin is there to kind of catch everything as far as collateral goes. So Bitcoin will be used as collateral, but it won't be used as money, as currency, because you don't spend gold, you don't spend Bitcoin, but it will be used as collateral. But the blockchain is here to stay, and the blockchain is going to evolve. I mean, all of these stable coins, they're all based on alts. They all run on alt platforms, alt blockchains. And that's the future. We will go into a store and we will use our phone and there'll be a QR code on the screen and we'll scan that QR code and it'll make the payment. That's coming. And that's all
be done. The statist alts. They're all the ones that have been blessed. The ISO 2022 type ones that have all got approved and are working with the banking system and are largely nothing to do with liberty and freedom, but everything about integration, data sharing, and surveillance. So
yeah, I want to come back to, you talked about a few things where things are going to kind of collapse, and I want to take it back to crypto and BRICS.
Yeah.
So you mentioned the yen carry trade as basically being vulnerable. I agree completely. That's one of the rug pull areas, liquidity. So the financial system, liquidity in the financial system, that's one of the rug pulls. Another one is Ed Dowd, which he could actually be right. His is the U.S. housing market. As the U.S. housing market slowly collapses, that's a trigger. But the other trigger, we don't know what trigger it's going to be, but the other one is crypto and the BRICS. And this isn't Bitcoin. You mentioned that the BRICS aren't really fascinating with Bitcoin per se, but they are fascinated with blockchain. They are fascinated with tokens. They are fascinated with finding a way to do cross-border payments. So they're going to use, and what I think they're going to do is so India has basically they're the big problem. That's the reason why we haven't seen a BRICS currency, because if you're an importer, you have to buy the token. If you're an exporter, you collect the token. So India is like the bad man out, and they're the ones that have been, we don't want a currency. Let's just trade in our own currencies. But eventually there will be a token that's used for these cross-border payments. And I believe that one piece of that puzzle, that currency is going to do two things to rug pull the US. The first thing it's going to do is it's going to basically say, well, we don't need the US dollar anymore. We can use this. So they slowly de-dollarize, right? The other thing that they do is they include gold in that token. Now, they only need to include 10, 15% in that token. And if they include just a little bit of gold in there, that makes the price of gold go up. As the price of gold goes up, that's bad for the US because it's bad for the dollars. Like, I don't need no stinking dollars anymore. Gold becomes more relevant. The irony of this whole thing is Trump. Trump is actually a very pro-gold guy, but he doesn't realize that gold is actually the antithesis of the dollar. And so he's actually, like, they're saying they're going to revalue gold, and they probably will. And if they do that, it's actually bad for the U.S. economy. It's actually bad for the dollar.
No, I don't think they will. They will make all their enemies richer.
That's my point. That's my point.
Why would you do it? And you'll crush your banking cartel that has been manipulating it for all this time on the derivative markets as well. The most they can do is a mark to market, which is current value. And I'm not even convinced that's too sure, because the problem is The minute they do it once, everyone's going to go, and when next? When it's at 4,500. And that's going to make gold the emphasis. And America doesn't want that because they don't have, I don't believe, I'm more prone to believe they don't have the gold they say they do. And B, I'm pretty certain that the BRICS nations have a whole bunch more, even if they did. So on both hands, they lose. I'm pretty sure China's going to come out because I know from Southern Africa how much they've been taking from Zimbabwe and subsistence mining, sending to Dubai, getting in official channels through Hong Kong, you just name it. They must be 30, 50,000 tons.
But one thing that we're seeing with Trump is a lot of acts of desperation. Yeah. The tariffs are desperation. The stable coins are desperation. The Intel is
empire. It's end of empire. It does. It's not really a Trump thing. It's whoever. I mean, Yellen literally said, "Go. I'm standing down. After me the storm. Go to emergency measures now."
Right. But one of the things that me and you do, we like to connect the dots. And so when we're seeing acts of desperation, the one thing that Trump is going to have a really hard time not doing is revaluing the gold. You just said that you wouldn't. We both recognize the negatives, right? But look at the positive. The reason why I think he will do it is because look at how much money. Now, most people that are watching this don't understand how the revaluation of gold works. It's bizarre. It's basically an accounting trick. So what they do is it's currently valued at like $35 or $40.
$32.22 at the moment.
$42 an ounce. So what they can do is when they revalue it, they can literally do a debit into the U.S. Treasury's account of cash. So the Fed will literally print somewhere between $700 billion and $1 trillion, and they could go even higher. But it's at least 700 because if you
what, half a year,
right? It's still a lot of money. And Trump's going to look at that money and go, it's an accounting trick. So all they do is the Fed basically says, oh, you revalued it? Okay, then that means your assets are this much. So here you go. Here's this digital money, and they debit it into the Treasury's account, and suddenly the Treasury's got who knows how much, $800 billion to $1 trillion in cash that they can spend. Now you're right. It's not when you got 37 trillion in debt, it's not that much. But for Trump, it's a big chunk of money.
Look, from a political point, if you're going into an election, maybe in the final year, you might do it if you've got nothing else you can do. But it's a policy because once you start focusing everyone on gold, you don't remove that focus. And the key for bankers and politicians is you diminish the role of gold. You keep pretending it's nothing. You never say the word gold. With all Fed chairs, it's with all politicians, it's part of the game. You don't talk about the G word.
I know we both agree that if he does it, it's actually going to be bad for the U.S. economy, good for gold.
Very short term.
But Trump, it's going to be really difficult for him not to do because, like you said, in the near term, it's going to help him. In a very short window, it's going to help him. But when you're desperate, you look for what you can do.
Here's the assets they can collateralize that very mentioned gold. All the national parks, this tokenization that Larry Finkelstein wants to do. They can go and say our land, the resources in that land we have in mind. They even spoke of this before. They can advance the real world asset agenda without mentioning gold specifically. And they could probably assign a value far higher. What's the land mass of the U.S. worth? What's your mineral resources worth?
Exactly. He can revalue. He can revalue gold on his own with an executive order. That's easy to do. He can do that in one day.
He doesn't have the power. You've got. If you think he runs the country, then you think you vote.
No. But he can revalue. He doesn't have to go to Congress to revalue the gold. He doesn't have to. But
his delegate would have to tell him do this, and I hear doing that.
Right, but he cannot tokenize land without the Congress.
No, it's a bit like the ejection seats on a plane that's crashing. The handlers say you don't leave this plane. You can't. It's $660 million of equipment. You can't leave it. You would never get allowed to use that ejection seat, and it's only one pull that you get really, because I don't even see the mark to market. I think we have a different view on that. He has to try assign value, and he has to advance the agenda that his handlers want, and that is tokenization, real world assets And I think they will go broadly on things at some point. Hey, we got this idea, we got this big, beautiful country and land and these parks that bring in this revenue and everything. And they're going to assume ownership and tokenize. And they might even try sell tokens to the public and say, you too can own. It's like this big privatization. There's all sorts of tricks, and they might be able to raise a lot more, and they'll get, institutions involved with special deals before it's made publicly involved. They have many rounds of capital raise, each at a higher price. So they bake the institutions in. I think they're more likely to go down that route. They can't afford to put gold in the spotlight. They don't want it. It's admitting everything. If they revalued gold to where it is marked to market, they're admitting that in the last 54 years, gold, the dollar has lost 8.4%. That throws all the BLS statistics straight out the window. That's how much your money's been devaluing in the last 54 years. If you go from $42.22 to $3,350, instantly your statistics for devaluation have been. I'm too strong on the no devaluation camp. I think the minute every YouTuber thinks it's a fait accompli, you've been shown a little bit of the ball, and everyone's got so excited, and it's a complete. It's like releasing the truth on 9/11 that he told you to do in 2016, and releasing the Epstein lists of 2024. Neither happened. It was all just base engagement. It's a wolf whistle for sound money guys. It's a trick. It's theater. That's it. You're not going to get it. No one's going to lottery ticket you into money overnight. Their game is impoverishment of you through inflation and debate.
I'll just use one final argument. Is they might the war in Ukraine was an inevitability. I mean, if you read the Brzezinski's book, The Grand Chessboard, the U.S. losing its influence in Europe was an inevitability. What Brzezinski said was that it's just a matter of time before you have Eurasia, where you have Europe and Asia basically merge as an economic block. And once that happens, the U.S. is the outsider looking in. And Brzezinski basically said it's an inevitability, but the one thing the U.S. can do is they can buy time by making Russia the bad guy. And eventually what they would do is they would use Ukraine as a pivot point. He wrote this in like 2006, 7, 8. And it's exactly what happened. We used Ukraine as a pivot point to buy time. In other words, and it worked. We bought some time, because if we wouldn't have done that, the U.S. probably would have already crumbled. Now, my point is that it was a desperation move. The war in Ukraine was a desperation move to buy time. Is the same thing with gold. If they do it, it'll just be an act of desperation just to buy a little tiny bit of time. But you're absolutely right.
That did them no harm. It only did damage to Russian, and it of course sees Slav versus Slav be killed, which is a tragedy. Anyway, we'll have interesting geopolitical chats, and we're going to have to get you on for that. But I do want to talk mining stocks. I want you to tell us, is it mining miners' time? It's starting to look that way. What's your take on that? And if you're a gold bug, a silver bug, and a platinum bug, which are your stocks that make you the most excited? Fundamentally.
Yeah, so I've been doing this since 2004. I started basically creating my portfolio, and I collect stocks. I just accumulate them and accumulate shares, waiting for an outcome. It's actually a one-time trade. I'm a lot like Michael Burry. In 2004, he basically he was a value investor. He took all of his value stocks, he sold all of them, and he put $100 million, at least $100 million of all his entire fund, and he put it in mortgage-backed securities. And it was like a one-time trade. And he basically knew once it was done, he was going to sell it all and then go back to value stocks.
Yeah.
And so mine has been a similar approach, in that I see this as a once in a lifetime trade, waiting for the U.S. And it's great. I mean, we set this all up, waiting for the U.S. bond market to become fragile. It doesn't have to fail. All it has to do is become fragile. And once it becomes fragile, gold just starts trending. And then simultaneous to that, if the stock market stops going up, which is what I'm waiting for, the stock market stops going up and gold goes up, the miners go up. So the gold's like the only place in town. Everybody's looking, for a place to make money. And so the gold benefits, the miners benefit if the stock market stops going up. And so I've been collecting stocks. Now, we've been in a 10-year bear market. Now, there's your XAU. We've been in basically...
Yeah, put it up because I just wanted to say gold is looking great now. And you see that green line, because we were concerned how it might finish the month, because the last 4 months it got sold off down to 3,288, 89, 90 levels. But if it gets above this green line, just to back you up, and I don't want to derail your thought there, but if we get through this first green line, at the 3409, we're going to be back on to where we thought we were when we were here, and we're breaking up. And we said that looked like the break, and we were wrong. It just got dragged right back in, and there was a bit of a rally in the dollar. There was a few things going on. There was a bit of yields done, etc. But anyway, I think, and the miners have recently continued to go up, as you were making, even during this period that we have been range bound on the gold, Don. So sorry, back to you and carry on.
Go ahead and share a chart. Show the HUI going back to 2001, and I'll show you how everything changed in this month of August. Everything changed, and you're right. We haven't broken out yet to, I call it, we're starting. Everybody's feeling the beginning. We're at the very early innings, the second inning. But bring up the HUI, and I want to show how this has been a really long basing period, if you will. So it's really early, has a lot of long legs, and people are going to make a lot of money in these miners. So if we go back, so here we have the HUI 640. You go back a little ways. Okay, so you can see the run from 2002 all the way to 2011. That was a beautiful 10-year rally in miners, and we did really well. And then from 2011 to 2013, that's when it all crashed, and we went into this basing for 10 years. You can see those two big red candles there in 2013. And we basically slipped into a channel. So you can see the very bottom of the channel, but it's basically, if you go, say, 200 on the HUI is the bottom and 360 is the top. We were in this channel for 10 years, and we just finally broke out of it. I would go all the way to 360 on those two red channels. I would actually move them. You can leave those there, but I actually do it from about,
I'm on a quarterly chart. Don, do you want a monthly one or a...
Yeah, I would prefer a monthly.
Yeah, because I did the quarterly. By the way, that's a broadening structure. We were doing some work on this at some time, and we that's the first time I've come to this chart. That's not one I used, but I have been here before. And you can see this breakout. And we've actually been 1, 2, 3, 4, 5, 6, 7, 8 months in a row up.
Right. But interestingly, so if you could draw this channel, so go about the top of the channel, do about 360, and the bottom of the channel, got 200. 200 is good, and then go about 360. Yeah, so right there. So you can see we broke down about 360. That's where the breakdown occurred. We went into the channel in 2013. We entered the channel, and then everything below the channel was like false breakdowns. But we stayed in that channel for 10 years, and we just broke out of it. Now it looks like we have broken out, and a lot of money. It took a while for the money to come in, and that money came in here in August, and I really started to feel it 2 weeks ago, where the price action in the miners, we saw for the first time in this 10-year period, we saw the price action where the miners were outperforming gold. We haven't seen that for so long. And so the miners were outperforming gold. And you just showed that XAU USD chart where the miners just started outperforming gold. But the one thing that's missing here is the S&P is still going up. So this is still early innings. But where this thing's going to go, okay, so it's at 500, a little under 500, got to 500 yesterday. This thing's going all the way to 1,500 to 2,000. That's where it's going. So we're still early stages, but you have to get on the train now. Once we got above 400, you wanted to get on the train. There was more risk of a breakout than a breakdown. Yeah. Now the breakdown is gone. We don't have to worry about the breakdown anymore. So there's no risk really of holding mining stocks. Now, what I mean by that is you don't want to hold a mining stock and you have a correction that lasts more than 2 months. Ideally, you only want the correction to last a month, but if it lasts less than 2 months, you're not going to get hurt. It's going to be a nothing burger. But if the correction lasts for 6 months, for instance, or 4 months, that's what happens is everybody leaves. That's fake. I don't want those miners. And all that early money, all that hot money that comes in, it leaves. You don't want that to happen. If that happens, not only it takes a lot longer to get back, might take a year to get back, and then mining companies will sell shares. They're going to get paranoid. They're going to go bankrupt. So they start issuing money because they're like, uh-oh, everything's dying, right? But we don't have to worry about that now because gold is in a bull market. Gold, the floor for gold is really, really solid. And so if they try to push gold down 10%, for instance, would take a little under 3,100, they will not be able to keep it there. And for them to push gold below 3,000 will be very difficult. They might be able to do it on an intraday basis. But my point is this, any correction in gold is going to be short-lived, most likely because we're in a bull market. And the chance of this going down below 3,000 is pretty low. I think 3,100 to 3,200 is my target. But if we go down there, it's going to be short-lived. So it's like a nothing burger. There's no reason to get out of the market and wait for it. It just doesn't make any sense because it's going to be very short-lived. And what we're waiting for is two things here. We're waiting for the stock market to stop going up. So the S&P 500 is your number one chart to keep an eye on. Bring up the S&P 500. It's the most important one because once the S&P stops going up, that's when the money's going to come into the miners. So we're waiting for that. The second thing we're waiting for is silver, and we're going to look at that chart. We're waiting for silver to get above 40. Those are the two things. So look at this chart here. I think we might get to 6,600, maybe that. But I don't think we're going much above it. And I'm waiting for, the rug pull. I don't know what the rug pull is going to be, but we're waiting for this thing to roll over. We're waiting for it, and that's the key. Once the stock market stops going up, we don't necessarily need a crash. What we need is 6 months of stagnation. We need 6 months of stagnation in the stock market. But the good news is once we get 2 months of stagnation, we're pretty much home. We're pretty much home at 2 months. So we need 2 months of stagnation. But if you get 6, then that's pretty much the end of the bull market. And then the miners are going to start ripping. And once they start ripping, wow, they're going to be beautiful things. I mean, we had Fresnillo as 168 points. Okay, so what are we looking at here?
So what I've done while you were speaking is I took that same SPY index and I divided it by gold. And everybody thinks the stock market is winning and this all-time highs nonsense. The peak stock market, and I want to reiterate a point you made, and I was nodding my head then because it's something I say as well, is peak America was .com tech boom. Actually, subprime, you'd already taken a beating. That in gold terms, that is the peak stock market right there.
Right.
From there, you should have been in gold and you are better off compared to the SPY. This is not the NASDAQ. I've often used the NASDAQ. It is a little bit higher on the NASDAQ because clearly tech has outperformed. But you've also got here quite an interesting structure that you might find interesting. And we're going into a current soft rally here, but it wouldn't take much for that to happen and for you to be in a head and shoulders structure there in the SPY market against gold. And you're getting that rally now in gold ounces. If that gold is about to break to the upside, which I think I was concerned for the last 2 weeks of August, we've survived it quite well and we've held up very well. I don't know if they're going to hold it down to 3,300 again, like they did last 4 months, 3,288, 3,300, that $12, $15 range. So if the gold breaks out, this turns over and comes down, unless the S&P is going up even faster than gold. That turns down. So yeah, just a bit of an interesting technical observation for you on the SPY in adjusted for gold ounces.
Right.
And that was only half a bull when we got to 2011, by the way.
So on this chart, so let's say the SPY goes down to 4,000. I think it's going to go to 3,500. Let's say it goes to 4 and then gold goes to 4. So right, exactly. That's exactly what you're going to see. That's what I want people to realize.
Yeah.
So the SPY goes to 4, gold goes to 4. That's exactly what the chart's going to do. And that's my expectation. So I mentioned these miners, the leverage is unbelievable. Silver has not even, we want you to bring up the silver chart now.
Yeah.
I think silver getting above 40 is really important. That's going to be really the sentiment flip. So we haven't flipped sentiment. We're all early here. But once silver gets above 40, that's when things are really going to get interesting. So we got Fresnillo's up 168% year to date. I said I've created a list called the Mormons. And I always said Fresnillo was the cheapest one. And it's up. The reason why they're the Mormons is because you want to marry them all.
Yeah.
So Fresnillo was the cheapest one. And sure and behold, it's been the biggest winner. But a lot of these silver miners are up 100% this year. And it's early. I mean, we're up 100% and it's early. We're just starting to move. So you can see how look at this cup and handle, right? Look at this cup and handle. So we are right on the verge, really, of breaking out here.
And the key point I want to add to you, what you're saying in support of you, is that we didn't have month-end closes of any great height. That was an open, that's a close, and that's an open. So if you look at these levels, we're actually higher at the moment than any of our best closes or open at a candle body level. So all these calls of $50 silver actually never survived to a month end.
Yes, exactly.
My apologies, a quarter end. I'm on a 3-monthly chart. So we are already, if we close a quarter, we're not yet a quarter end, but we are soon a month end. We will probably close at an all-time monthly high, and quite possibly at the end of September an all-time quarterly high. That is literally the third lip. I do think we've got room for one more tiny little dip down before we go, because I often find that it's once, twice, 3 times a lady, not always on the third time. It's 3 times and then you break on the 4th. So there is possible chance of minor, but if gold breaks and runs, silver will go higher first before it gets any form of return move.
You're right. There is a possibility that we could get 1 or 2 red candles, depending on what the stock market does and what gold does. It's possible that could happen because, like I said, we are really close to a rug pull, and we don't know.
Everything that isn't nailed down gets sold, basically, in desperation.
Exactly. We don't know how gold is going to react to that crash. I think that, so there's 250 plus and you got $63 trillion in just U.S. stock market alone. I think a lot of that money will go to gold. And so if it does, Francis, your images.
My image is freezing. Yeah, we had a little bit of internet slowdown there from one of our sides. I just thought I'd bring up Fresnillo as well for you.
Okay.
Sorry for that. I don't know why the internet seems to have gone quiet. Let's look. Let me see if your picture is still holding strong.
Yeah. Right. So, yeah, going back to that silver chart, you get above 40 and you're probably going to get to 50 within 3 months. It's my expectations, because there's not very much technical resistance above $40. Not only that, but you're going to get a lot of momentum. You get above 40 technical, a lot of people are going to come into the market. And it's going to be really hard to push it back below 40. But that said, I've been saying this quite a bit on Twitter, that we're not going to break out above 40 until the S&P stops going up. And isn't it interesting? We haven't even touched 40. So the S&P's been strong and we haven't even touched 40, but we've been over 37 for a month. We've been over 37 for a month and we haven't been able to touch 40. And that's kind of what I said, that silver's going to hang back here and wait until it's time. That's the one thing I've seen. I've been following silver for years and years. And the one thing I've seen on silver is silver tends to to kind of know it's coming. It kind of hangs back, it waits, and then it takes off when it's supposed to take off. And so,
can I give you some encouragement for that 40 run, which I think we've got our bespoke HVF draw tool.
Right.
And that is on the 4 hour. So this is on the 4 hourly time frame. You're going to get your wish, in our opinion, on balance of probabilities. 4 hourly time frame, silver. Our 3 impulses that we need. There was your J-Powell triggering event. You've had the classic pullback channel, and you are now in resurgent breakout mode, and that's a 41.27. $41.27, and there's a resting point at around 39.73. So there will be some resistance for the 40 before that gets run.
I'm expecting 34 to get retested one more time. What do you think?
I think after the 41, as I mentioned on the bigger time frames, you get a handle again. So I think gold breaks down and gold breaks up, my apologies, and that's invariably drags silver up and silver moves. After the 41, I think we get that pushback on that massive cup and handle back up on the bigger time frames. So it's going to get resisted that one more time before it's allowed. Then 4th time, which is the one after this $41, 41 and 30 cents dollar run. So like you, I think after this, you want to take your profits technically trading, buy silver ounces on the dip, and then rate, and it comes back around, back on that much bigger time frame chart. If I take you back up to where we were on the monthly time frame.
Yeah, if we do go all the way to 41, then maybe we don't reach as 34. Maybe we go 35, 36, 37, which will be better.
You'll come back to the lip, basically. You'll come back to the cup and handles lip at the candle level. So I call it wick trimming. I draw it like this. When you're looking at the big time frames, I don't stress the wicks. Yes, we know there's big resistance that comes at 50, but actually it starts sooner. It starts here, it starts all the way here. So you're currently already a break. You go to 41, that's a bit higher, and then you come back down. You could just come back to the 37.5s, and that's the lip.
That's a possibility. Yeah, that's a real possibility. We will see. The bull is going to buck because there's a lot of early money, late money coming in here to the miners, and this, because we've been waiting years and years and years, the bull market is going to buck. It's going to make people hold on for dear life kind of thing. Yeah. You're not going to get a free pass.
No, you're going to have a hard stomach. Yeah, and it's always like that with silver.
Exactly.
So, a hard stomach.
Yeah, so silver goes down, at least it's going to go down at least 10%, I think. And if it goes down 10%, and that takes you to 37, and the miners will go down 20%, probably, a lot of them. Yeah. So yeah, that's the hard stomach.
Who's your best miner? So we showed Fresnillo, a big overperformer right now. I've been in Agnico Eagle mining, which has done exceptionally well because it's got HVF structures on it. Yeah. So I will look. What I'm looking at is where's your best fundamental. You analyze these stocks.
Yeah, I do.
Fundamentally.
So I created a group of stocks they call the Mormons back in November of 23, and they've done unbelievably well since then. And so the first one that I've ranked number 1 is Coeur Mining. Bring up the Coeur. Yeah, Agnico's done absolutely unbelievably well.
We've got 200 plus targets for it.
Yeah, year to date, it's up 75%, maybe 80%. Agnico. Yeah, you can bring up Coeur Mining. So I
Coeur. Let's forgive my ignorance.
CDE is the symbol.
CDE.
Yeah, 1E, CDE, 1E. There you go.
Coeur. Okay.
Yeah, Coeur Mining. I have Coeur Mining ranked number 1.
Is this a silver play more than a gold play? Tell us some of the story.
Yeah. So the one thing about it's very difficult to find a pure silver miner.
Very few. Yeah.
Very, very few. So what you're looking for is a company that's doing at least 40%, at least 30. I like 30, 40, 50% of the revenue.
Yeah.
And so Coeur has about 40, 50% of the revenue. And so you can see how it's bounced off the bottom here at $2. There's a beautiful, beautiful entry there at the bottom. Back in February 24 was just a beautiful, beautiful entry. And now it's really starting to run here. So it's going to go. My target is $70. So we still got a long way to go, and it could do a lot better than 70. 70 is my minimum target for it. But the thing that's nice about KuCoin is they just did an acquisition it's really helped them. Silvercrest Mining. It lowered their cost, gave them more silver revenue, and now they're on really strong footing. So I have them ranked number one. The company, and you can see it's really starting to break out here.
We've got 50. By the way, it is an upside HVF first in a new trend, which means we expect overperformance. And just the HVF target is $51.
Yeah, this stock will, 20, 30, 40.
That
50.
means because it's the first setup in a new trend, we see overperformance for that.
The other reason why I have it ranked number one is the location of their mines. So 60% of the revenue comes from North America, and it's hard to find silver miners in North America. So they have 40% in Mexico.
Yeah.
And so that's a reason. And it's also a brand name. Everybody kind of knows. KuCoin's been around for a long time, like at least the 1980s. So Wall Street's going to buy it. I always say that Wall Street's going to buy KuCoin and Hecla like candy because of the location of the mine and where the mines are. So the second, I have Hecla ranked third, but the second company I have ranked second is Pan American. You can bring up Pan American, PAAS.
Yes, that one I know. And it's always been a well-rated silver stock.
Now, Pan American, they just acquired Mag Silver, which really helped them in the silver mining space. So that by picking up Mag, that took their revenue up over 25% silver. And it's probably going to go to 30% because silver is going to outperform gold by 2.5 to 1. And it's got the name silver.
How many of these sorry to interrupt you, I'm being rude, I apologize. How many of these have our bespoke HVF set up in them? And I just thought while I'll talk, I'll show you these because that throws out 172 targets.
Right.
On Pan American. That's on something that's trading at the moment at 30.
Yeah, you sound like me with these big targets. That's what Don Durrett does. He puts these huge targets. If you go to my website, it just shows you these massive targets.
Well, these things work.
Everybody, people have been giving me a hard time for years, and now all of a sudden, now you're throwing a target out there that matches mine. Yeah, I have them. Let's see. Yeah, 172. Wow, you're a little higher than me. That's beautiful. Yeah, and I think you were a little higher on another chart. Okay, so Pan American, beautiful company, beautiful chart, beautiful upside. So that's ranked number 2. My third ranked chart is Hecla. Now Hecla,
no one's on that.
Hecla's been a problem child. Their management team, all they do is make mistakes. The thing about Hecla is they do well in bull markets. I mean, you can go back and look from 2009 to 2011. They do well in bull markets because the revenue is going up so fast, management can't screw it up. And so they're going to do well just from the price of silver alone. And they're cheap. They're always cheap because their management does a poor job. And so you can see they're undervalued. And so you can see when Hecla's they're going to perform really well, but I don't have it ranked 1 or 2 because their balance sheet is terrible. Now here's a perfect example of Hecla's bad management. They recently issued $200 million in shares. They diluted shares by 200 million for debt that was due in 28. They didn't need it. They didn't need the money. They just got paranoid. This is typical Hecla. This is what they do. They're like, oh my goodness, the price of silver is going to go down. Our balance sheet's a mess. We got to raise $200 million. And what they did, so they raised the money and they paid the debt off. They didn't need to pay the debt off. The debt wasn't due until 28. Just be patient. Wait for the silver price to go up. They could have paid it off horizontally.
If they might have thought rates are going to go up. You have a fixed deal.
It's just paranoia. Yeah, it's just paranoia. That's all it is. Fear. It's fear. It was a fear deal. But you got to own Hecla because all of their mines are in North America. And so that's going to benefit them in a big way. And Hecla is going to do extremely well. A lot of people won't own this stock. A lot of people wouldn't own KuCoin. I was telling everybody to buy KuCoin as a $2, $3. I was telling people load up on KuCoin. Everybody was telling me, I'm not buying that piece of junk. because historically it does poorly in bear markets.
Yeah, bad management does, but all heavily indebted companies do.
Yes, but they do fabulously well in bull markets, and so
the currency is getting debased, and the item they're pulling out of the ground is appreciating. And the more the currency gets debased, the more the thing they're pulling out the ground appreciates. It's kind of like you were going to score a goal, and I took the ball off you, and I scored a goal. It's not a 1 goal; it's a 2-goal swing. For every goal you're missing, I'm actually scoring. It's a perfect trade. That's why I call the anti-fiats. I mean, it just is. It's just unbelievable. And
this is crazy. Our targets are the same. What's your target in equity?
58.
What?
$58. And it's not triggered this month, by the way.
This is hilarious. So
did I tell you we actually have an 85.38 for this? It's going to be huge. And I tell you why, because I've got other technical structures that gave us this risk reward. So if you give me a minute, I'm going to drop down. I'm going to show you why this thing jumped already. Here we had there was results that came out. I don't know if you were aware.
Of course, I'm aware.
Just recently. No, I tell you this because I expect you to be aware. I don't mean it like that. Sorry, that sounded terrible. In terms of the technical event that led to this gap, it was results driven. For everybody who's watching this, you will know that. But the amazing thing is we've got an upside HVF structure on it at the same time, mode 2-1. So I've dropped from the big time frame where I was giving you the 85. We had this little head and this little HVF structure here going into a known news results. Let me just take it even down from daily into like 8 hours so you can see this a little more clearly, because this is exactly what we do. And when you combine HVF method, and this is where this super trade came in. I was demonstrating to the community how going with this upside HVF structure, which is our technical play, you had that secondary high, a little bit of a kink there into a low there. Then you had here, and then you had your in-between candle, which was your high for this leg and the low on that day, because the results were coming out the next day. So you had to get in there and say, okay, we've got an upside HVF structure. We haven't got a triggering event, but the results are tomorrow. You need to be in today because it will gap if it is what you think it is. What happened? Where did it gap and open on? Bang on our interim level 2 target.
Right. You think? Yeah, absolutely.
Then it went up to our full target and has then just been grinding a little higher. So you get the main move, the fast move. Now you would have, because of the bigger time frame one, we wouldn't have closed at all or only done a very small close, 25%. If you'd gone super size, you could de-risk a little bit. But now this is all on the 8 hour. I take you back and I say, but long run, if you're patient, you've got an 85. And this is a ridiculous risk reward ratio, because this is where a single technical structure on a small time frame inside a funnel of one on a bigger time frame, inside of an even bigger macro pattern, allows you to use leverage to break in incredibly small. That's a 565.64 risk reward ratio. If you now only just close a little bit, reduce the leverage and leave the trade on. And look, you might hold it for 3 years and there'll be some cost to that. But how much are you going to care if you would risk $1,000 on that run at 1 and you're going to come out with $565,000? Do you think you could cover the carry cost for that for a couple of years? I think you would. Out of $500,000, I think you would quite well. And this is the uniqueness of the method. And I'm so glad you brought us past, Heckler. Let's go back up to that bigger time frame, and I'll just redraw the big potential, because we were here. You can see my annotations on the chart. We were here and discussing this in the community, literally just before and around and just after the results. Again, so this is how this one does.
So the thing that's fascinating is our targets are very similar, but we use different methods, which is amazing, right? So the way that I do it, I'm probably the only newsletter writer. I've been doing this I created my website in 2012, but the way that I do it is I
Give
use
the website name while you're talking. I'll still give you an opportunity and closer, but where is your newsletter? Don Durrett's mining newsletter. Where do they find it?
goldstockdata.com.
Goldstockdata.com.
Yes, yes. Okay, so what I do, and I use $100 silver price as a future price. That's my starting point. It's my target. And then I project out what their production is going to be in the next 3 to 5 years, and then what their costs are going to be in the next 3 to 5 years. And then I put a multiple on it based on what I think the multiple is going to be, because we're going to get multiple expansion because their margins are going to expand.
So my problem with stocks, I love everything you said there. I want to be heavily long and just invested in silver stocks. The great taking. I can't get certificates. Talk to me. How do you get paper certificates?
Yeah, it is expensive to do. You can get them, but it's expensive. You got to pay for it.
I haven't found a way to get it done on any of these stocks.
Well, the way that you do it, you don't do it. You get a broker to do it for you. You pay a broker.
They've all refused. They all don't want to do that. They all, we can really do that.
Right. The reason why is because you're in England, and the guys in England.
No, it's not even that. I've got a Schwab account, for example.
Exactly. You don't want to use Schwab to do it. Schwab won't do it. Right. So what you need to do is you got to go to some of the bigger investment banks and get a stockbroker, and they will do it for the money. You can find somebody.
So mention a name that you might know that can be used. That if I say, can you do that before I open an account? I don't want to open an account to them if they're going to give me any BS.
Trust me. Yeah, trust me. People do this on a daily basis. It's doable, but you got to find a broker to do it for you. That's the problem. You haven't found somebody to do it for you. It's a matter of paying somebody to do it. You can't do it on your own. You got to find someone to do it for you, and you got to pay them. That's the problem. And so, yeah, just keep
that? That's the value. Who's those people? Tell me who those people are, so that everyone listening can. Okay, that's the relationship I've got to open.
Okay, I can help you out. So in my forum, somebody in the forum, I have 1,200 subscribers to my website. The forum's beautiful. So if people are watching this. Somebody put a name down in the forum, and I'll send it to the sniper. So I'll get you a name today, no problem.
Great. Okay, awesome. We'll share it. I don't want to put you under recording pressure to say something you're not comfortable with. Carry on with your list. This is great.
Yes, I will. You like silver miners. I'm going to give you some really good names. But I wanted to go back to Hecla. It's fascinating how people have been giving me a hard time for my targets for years and years, because I'm the only guy. You can't do that. You'll never hit those targets, right? And my point was always, and here you are, you're basically showing.
And I tell you, not only are you going to hit these targets, in my opinion, on balance of probabilities, these are first structures after major bear runs. You're going to exceed these numbers. Heck, they're currently trading $8. I'm telling you, through 85, you'll go triple digits. This is people don't understand this.
This is unbelievable. So I always say that my targets are conservative. The reason why my targets are conservative is I'm using $100 silver for my projections, but I firmly believe that $100 silver is way, way too low as a target. If I used 125 to 150, because I think silver is going to go somewhere between 125 and 150 in this bull run. If I use those numbers, the returns are so crazy that nobody will believe them, right? So even your numbers are like, what? $85? There's no way in hell it's going to go to $85. But yes,
a lot of this is also going to be about how debased the dollar is too.
The next chart, the upside is even higher. It's Endeavor Silver. That's number 4.
I always liked Endeavor. I have to say.
I have Endeavor even higher than half the first 3, because the reason why for Endeavor's higher is because they're building. The first 3 really don't have any production growth, whereas Endeavor, they're building. They just came out with one mine. They're going to build another one. Pitarrilla is going to add more than 50% to their production. And so we got to wait for Pitarrilla to get built. So maybe your target doesn't reach mine, but
$57. How about that from 588?
Yeah, I'm higher because you're so I'm higher because of Pitarrilla, But Pinarello doesn't get shown in this data. That's a mine that they bought that they're going to.
Again, I say all these are first setups in new trends. So the only thing about our methodology, if you're already in a bull trend that has been trending for a while, we treat it one way, and we would close 75 to 100% of the position. If the first low is here and the whole setup is just based off of with that green tag being at an all-time low, then they're all showing up in and around the subprime crash or the 2000. It's either or. And the setup is there. This is only a beginning of a major macro. We would normally only close between 25 and 50% at that point. You're still likely to have some technical pullback at those targets, but you will then subsequently, if patient, go even higher. But you'll certainly get the main surge part of the move. And can I also say that this has a W bottom in it as well for 35. So you may have a little rest there as well. So we call these complex W bottoms.
Right. So if you own these 4 stocks, you're probably going to get a 7, 8, 9 bagger, which is amazing. If we hit these targets, somewhere in there, 7, 8, 9. Just beautiful, beautiful returns.
Okay. And they will be throwing off dividends, which you can reinvest if you're smart in the stock itself.
Right.
Because they're going to hemorrhage cash, these guys.
All right. So the next one would be Fresnillo, which
we did already bring up.
Which is already
mainly Mexico and is one of the biggest silver miners in the world, listed in London.
Yes. It's really ripped. It's up 100.
That's the problem with it. It's such a big silver play. It's already ripped immensely off a falling wedge. We were watching that, but
so I only have my target on this is only a 5 bagger, but it's still solid. So a lot of people aren't going to buy it. It's like it doesn't have enough juice, but a 5 bagger is still pretty good return.
Well, let me tell you, when they see the earnings, a big silver miner, when silver goes lunatic o'clock, it'll be hemorrhaging so much cash by force of PE, it will go higher. It's like buying Apple when it was a 500 billion market cap. You go, bloody hell, this is a 500 billion market cap. That's half a trillion. Do people realize how big it is? Next thing you know, it's 3 trillion.
Right. You make up a good point. So I use a future multiple to identify the future valuation. I have to guess on the multiple, right? We don't know how high these multiples are going to go. So Fresnillo, in theory, if they have this huge blowout in earnings and they start paying these huge dividends, and they like to pay dividends, the multiples could go actually bonkers. If we got a 35 multiple, which isn't crazy land, because I'm expecting like a 25. So if you get another multiple, this thing could be an 8 bagger, like just what you just said. So the valuations could go nuts. What is your target?
The biggest major operator, and remember, it gets into ETFs then. Big S&P 500. It won't be in the S&P that's UK listed, but it'll get into the FTSE 100. I'm not sure if it is at the moment, but the point is, when you get bigger, it sometimes can further feed the frenzy.
Right. So my target there is about 650. What do you have? Do you have a target on that one?
It didn't give an HVF. It gave a falling wedge. And I was then tinkering with the fact that it was on the London stock market, and I was trying to rebase it in dollars to see if we would get it. And I still couldn't get a pattern structure. But you're now looking at Fresnillo in dollar terms, in pound terms, and it's a ripper already, but it's no technical structure that we can do anything with.
Right. The next one is First Majestic, and First Majestic looks pretty good as far as upside.
Hold on, I said no technical structure. That's not entirely correct. So again, this is in dollar terms because I've divided it by GBP USD. It's a London stock. It's a stock listed on the London market. But if I just throw this might be very interesting. Again, I'm a wick trimmer, and I'm just picking off the wick on this Fresnillo. So let's do Fresnillo properly. That's very much 2 rounded bottoms here, and you are back at the neckline. This is slightly higher. I always allow for it a bit run. We could have maybe made the line a little bit higher, but on the monthly, you didn't have a monthly close above that over here. So I'm happy with the level there. Just so you want a target, it's not an HVF target like we had on the others, which are the most reliable and the best, in my opinion. But however, a double bottom target and a silver bull market, this is going to be still will be killer. And I will do the following.
The next one's First Majestic, and it probably could have got ranked in front of Fresnillo because Fresnillo's really ran. But
well, I often also say the first runners are often the best. It's the same in crypto. They do the most generally. The ones that struggle, we know that First Majestic has the Jared Canyon issue. It's done. It's been lagged because of that aspect. Keith Neumeyer's more, from the investment banking background. He just wants ounces in the ground, maybe less of a technical miner. But he's not a fool either. I'm not knocking him in any way in anything I'm saying. Can I give you the 2,254 on a double bottom there for Fresnillo? That's in dollars. So it's rebased to dollars. So it's about double what it is now, approximately.
That's way too low. That's way too low.
It is way too low. It will go a lot more. But that's what I say about double bottoms. They give you a target, but then it's more about there's a reversal. That's a water. You'll make a target and you'll go lower. Same with the head and shoulders.
Right. That's actually a 12-month target.
Yeah.
I'm more 3 to 5 years.
But by the way, before we go to First Majestic, this is great stuff, by the way. I'm sure hit the like button and subscribe. And remember, goldstocksdata.com. Go support our boy, Don Durrett, doing all the hard work here. I wanted to show you the other Endeavor Mining, which isn't specifically Endeavor Mining EDV. That's one. Now, that's not the one I wanted. Not on London. I wanted the US one. EDV was TSX. It's Toronto. That's it. So I really like this, but I don't know. Is all the silver, explain this to me, is all the silver interests in Endeavor silver, and is this only gold and other mining?
This is the number one miner in West Africa, gold. Number one.
Right.
I have it ranked number one. Let's put it that way. Endeavor Mining is a gold miner in West Africa, but I have it ranked.
I've got some scary numbers on this one for you.
Okay.
And I just want to give them to you. And I've had these numbers, by the way, for 10 years. This is work of a decade we've been talking about in the community. And I'll show you this. I think you'll enjoy it.
Right. So let me give you a little backdrop on it.
Yes, go ahead.
It's a major. They have a fantastic team, fantastic management team, top notch. They know how to build mines. They know how to operate. They have low cash costs. They generate a ton of free cash flow, and they're just a beautiful company. I own it. The only issue with them is West Africa. As long as you're okay with West African location risk, it's a beautiful stock.
I'm okay with it. I am an African. I use black. I wear black. I can tell you this much. I think the risk is going to come in the first world. And some places out of America might actually be bad. Who's going to nationalize? The one that lose money, that are collapsing. I think we've overpriced risk in some places. That's not to say I haven't heard of horrendous things going on and whatever, this and that. But and there isn't risk in Africa. No. No one gets that more than me. But I think you're going to be fine. Here's what happened with the stock, by the way. I mean, we've been tracking it for ages. I mean, this is just so that people don't think we're only bulls. This was the head and shoulder. That was the end of the bull market. Now, it didn't have a great 2011. Many people don't spot that. When 2011, don't forget, was a bull market for gold and silver. That head and shoulders down, broke, met target, is a key level. That blue line is 35, key level. I'll come back to it. This is such a fascinating story. Then you have another neckline that I've annotated. This was done 2, 3, 4 years ago, and that was the last time I visited this meaningfully to draw. This was a head and shoulder. There's your one shoulder. There's your other shoulder. This was your head, and we had that. I went on in 2016 with one of my South African friends who's a precious metals nut, and he had 9% of this company. He was deeply invested in Endeavor. And he was telling me how it's going to look. And they had just changed CEO. I think that was round about here. This was a bull flag, by the way, on that right shoulder as well. That gives you 117 target just off the lows. So this is a head and shoulder reversal. And then what happened is you started a break and then you got put on this very frustrating. And a lot of that is they'd sorted a lot of stuff out, but then the gold market went a bit soft on them. So by the time they got their stuff out right and all of that, then there was other things. The market wasn't moving. So we flagged for a long time here, and they broke that flag. And now they've also broken that key level of 35 that had kind of been since 2008. It had been below 35. So we've drawn the draw on this for ages. This neckline, when they finally left this neckline of 28 and they broke those, they broke the downside target, which hung heavy over it from that head and shoulders in 2006 and 7. They broke it. That's why they flagged for so long. There was a key level, that blue 35 level, and that target was hanging heavy so long. They've now broken that. Next key levels, they'll have a little bit of a reaction, possibly at 62, which is the neckline of that reversal structure, which clearly had something going on there. And then 117, 204. And we've been bull that since 28. We've been engaged. I bought here.
Yeah,
I did this to hold, I have to say, at 25.
Yeah, Francis, you're way too bearish. So my target for this.
That's remember again, I've just said that's a reversal pattern. So with that shoulders, you get a target, but the whole thing is it's an end of trend down and a new trend up.
Right. So at $5,000 gold. So basically what Francis is showing you is that, we're going there kind of in the near term, maybe in 12 months or a little more. But if you use $5,000 gold, which I use, I have a target of $380. So much higher. Okay. And so now
if you could get a reaction at 204, you've now reversed up and you're going. So the trend turned.
You talked about how the African miners are too much risk is priced in, right? This is a company that this year, their run rate right now is $1.9 billion in free cash flow. And they only have $1.1 billion in debt, and they have $737 million in cash. So they could have $2.5 billion in cash by the end of the year, pay off their debt, and I hope they do. So once they pay off their debt and they start generating $2 billion, and their margins are going higher, they're going higher. So they're going to be generating $2.5-3 billion in free cash flow and have zero debt. And all that cash is going to be coming back to their shareholders. And the margins are going to start blowing out. So the margins today are 4.5. The free cash flow margin is 4.5 today for a company that's generating almost $2 billion in free cash flow. It's ridiculously cheap. And I think that margin is going to go, at least 3x. So just margin expansion alone will 3x this company. I mean, you got to, that's the kind of leverage that some of these companies have. Just massive leverage.
Well, when we were jumping in on this bull flag break over here, it was at 23, calling 205. You wouldn't have said it was conservative. And this whole draw, I haven't been here in ages. It's been on here for ages. And every now and then, we're looking at the mining stocks. I get it out and it's straight away there. And it is a reversal target. So head and shoulders always imply overperformance because they trend change. And then the first HBS and new setups imply overperformance. So you would only do a partial close, and you could even continue to hold. But you would get a reaction at that point, probably, and gestate for a while. So, it depends how rich you want to be and how patient you are. So you were talking, so we did Endeavor Silver, and then you were saying First Majestic. So I owe you a First Majestic chart.
Right. One thing I want to say, it was interesting you brought up Endeavor Mining. It's unbelievable. You can get
two countries. I never asked you, and I meant to ask. Uganda, Kenya, what are we talking?
West Africa. So we're talking about Cote, Senegal, Liberia, places like that.
Yeah.
Burkina Faso and Mali.
Ivory Coast. All of those kind of. I must have a look at that.
Mainly Western Africa, but the issue here is the quality of the company. I mean, you can get a 7-bagger with a high quality company. I mean, it's pretty ridiculous. But the reason why is because nobody's expecting gold to go to $5,000.
Yeah.
Now, my
You're
return
all going to get caught by surprise. And that dollar will be a lesser dollar. That's how it gets to 5,000. Unfortunately, you'll spend $50 for a Big Mac and a Coke.
Yeah. Let's talk about that. Before we go to First Majestic, let's talk about the dollar real quick. I believe the dollar will end the year below 95. And then next year it will go below 80. And then the year after that,
that's measuring it against other collapsing fiats who will be doing much the same thing. The gold price, when it does that, will be accelerating immensely. And the silver even more so.
The reason why the dollar is going to crash is how we talked about macro earlier about the U.S. economy getting weaker. The U.S. economy gets weaker, the dollar is going down, down, down.
Yeah. Now, I always say in bull markets, the one that starts last and is the least, is the heaviest, is actually the one that will run the least. Your early runners are your best runners. Now, that doesn't mean you should buy Fresnillo before Majestic on multiple, but you'll be shocked sometimes that the ones, we have this in the alt season every time. I always say your early runners, your best runners, and the true patterns. This one's pattern is yet to be finished. So it is half a stage behind. And that is some of the issues that Fresnillo has. But when they get fixed, I think he's gone and chased ounces in the ground. But I think you've also had quite a bit of dilution. What's your take?
Yeah, they did have dilution. And the other thing they had was poor performance. The silver price, during that period, silver didn't do well. They weren't making money. They were having poor quarters, a lot of poor quarters, and the stock just went down, down, down. And then, JC, really bit them in the butt. They had to put JC in care and maintenance, and that's a tough one for them to overcome because so many shareholders went negative on the company, and now trying to get that back, trying to get that reputation back is difficult. But the one thing First Majestic has going for them
changes that. That's the only thing.
Well, the one thing they have going for them is they do have a good brand name, First Majestic. People know who they are. The hedge funds will buy them. There's not very many choices. There are very few choices of silver miners that have liquidity. If you look at the number of silver miners with a market cap over $1 billion, it's less than 10. It's more like 5. There's very few silver miners that have liquidity. And so your hedge funds and your ETFs, and even your private equity, they want liquidity.
What's its market cap? So what you're saying is there's sufficient float and it trades. What's the market cap price?
About $3 billion. And so $3 billion, and there's very few that have market caps over $1 billion. So First Majestic is going to benefit from that. They're going to benefit from their liquidity. They're going to benefit from rising silver prices. And so they will get a high multiple. There will be demand for this company. As the price of silver goes up, First Majestic is going to participate. This is one of my, things I talk about. You want to own stocks that are going to participate. If silver goes from 40 to 50, First Majestic goes up more than 100%, and probably 150%. It will rip. It will participate. And then as silver goes from 50 to 60, it's going to participate. And so you got all that going on for you. First Majestic, you got the brand. Now, they don't have a great balance sheet, but it's not bad. I'd like to see them pay off their debt. Their margins, they had a good quarter last quarter, so now they're trending in a good direction. The Gatos deal really helped them. They did an acquisition of Gatos. That really helped them. It lowered their cost. It lowered their ASIC down to about $20. So they're making money, and they're going to benefit from higher silver prices. But the reason why you want to own First Majestic, a lot of people probably don't own it because it's had problems. The reason why you want to own it is because of Jarrett Canyon. Jarrett Canyon is going to generate a lot of free cash flow for them. It's going to produce at least 100,000 ounces a year. You're getting it for free. It's not priced in. And it could go as high as 150.
That's currently, let's just say you used a certain phrase, but does that mean mothballed?
Yes. Care and maintenance basically means mothballed. Yes. And so they're going to restart that mine. We don't know what the CapEx is. We don't know the timeline, but it's not going to be a lot of money. It's going to be 50, 60, 70 million.
Because they should have done quite a bit of legwork on it, and it's really just a case of a little bit of a dust up. He says rather
Well,
naively.
yeah, it's somewhat. I mean, they have a good team. They know how to restart this mine. They will restart it. They will make a bunch of money. And that Jarrett Canyon mine, when it does get restarted, that's going to be the key for them to get to be like a 7-8 bagger. But just silver alone, they'll be a 5 bagger. And so, I mean, what target do you have for them? They're currently about $8, maybe 9.
So just this initial small setup is going to have it's already broken here at 751, and that's a run to 12. That's nothing big. But in the overall picture, so it's already in a small upside HVF on a sort of daily time frame. The others were on like monthly and quarterly setups. This one's still to form. So what we want out of it, so it's half a cycle behind, which I think it will accelerate to catch up. But it's kind of got this structure, and it's now got a little squeezy here that I'm busy telling you about on the weekly time frame. We're back up on the monthly here. And what we need is a third up leg here with a little bit of a rest. So then we have our 3 impulse squeeze structure, which we're always looking for. And then it just goes when it goes here. But it's going to be, I think, a late runner compared to the others. But I think you could have others that are super, super pricey, that eventually it starts to look cheap, and then it has a purple patch. So you might get out of ones where you've already taken a 10x, and there's might be a 2 or 3x left in Majestic that's already gone up a 2 or 3x, if that makes sense. So you might get an extended run on the second half of its move. That's how you could possibly play it. I wouldn't rush to be in it first now, given some of the other ones technically that I've seen. So again, non-advisory, I'm talking about what I'd like to do, and Don's talking about what he'd like to do. Neither of us are telling anybody to buy stocks, but that's how I would look to play it.
Well, I actually say to buy stocks under 2 circumstances. Number one, that you believe that silver is going to $100 because the U.S. economy and the U.S. stock market and the U.S. bond market are going to fall. So you have that very strong belief of that outcome. Then
you see solid state batteries, by the way, a fraction of the time to charge, much bigger range and higher torque and everything. A big quantum leap. One of the key aspects of it. A huge, just a 20% penetration of market would take 96% of the current supply of silver to make.
Right. But if you need to have that strong belief that silver is going to $100. Otherwise it's too nerve-wracking. It doesn't fit. That's number one. Number two, you have to recognize that this is speculation. It's not investing. That's what I tell people. Yeah. We're trying to get 5 and 10 baggers. That's not investing. Investing is getting 15, 20% a year. That's not what we're doing here. So which
is no good in an inflation environment. That's probably a real 15, 20% a year anyway.
we are speculating. And so if you want to speculate, and so when I say speculate, it means you are putting your money at risk. So if those two things, if you're willing to speculate it and you have the belief it's going to 100, then jump in. I would say that.
Good.
First Majestic, my target for First Majestic is $50 to $60. My exit point. So sometimes I actually have exit prices on stocks. I actually have an exit price, $50 silver and a $50 price, and I'm gone. I'm out.
Out of First Majestic.
Yeah, and my entry price on First Majestic is a little over $1. I bought it in January of 2009. My cost basis is 0 because I sold some when it was at $20. Basically, I'm gonna have almost a 50 bagger on this guy.
Yeah, I sell great. Wow, fabulous. Yeah. That's been excellent. You well done. Anything else equity wise of miners that you'd care?
We'll look at one more. Let's look at AYA. AYA. Well, yeah. AYA.
Oh yes, I bought this one and had a nice run on it actually. And then I closed it on the HVF structure, which I'll show you in a minute. So yeah, you can see where we've been involved. You can see all the targets. By the way, you want some good news? We still think it's possible that it does a 145, 146.
I'm glad we pulled this one out. That's awesome.
Yeah. This is a big move from up here. The trade we took out of it is this structure here. And I then closed it and I pivoted into Agnico. and it's done fabulously well. But it did have a little bit of a fizzle back here. I'm not quite sure what happened because all the others seem to have done quite well. But it did have a fizzle back, a little bit of a falling wedge. It took some of the shine off it. But it had already done what we'd wanted out of it. And I was happy that I'd got out. So that's why the value of targets, because in the meantime, Agnico's been absolutely mooning, by the way, whilst this one hit almost 20 up top here. What was the high? It was 1957. We didn't sell the high. We were out over here.
This is great.
Then it came right down from 20 to almost $8. We're on a log scale chart, remember. If I just do that, it's quite a pullback.
Yeah, so our targets are nearly the same. Yours is just a little higher than mine, but it's amazing. On a few of these stocks, how you have these big targets, but they match mine. Yeah. You have up there $145, and I'm just a little below that.
Yeah. Yeah.
Now, the one thing I want to say about Aya that's important here is in order for me to hit my target, they have to build Boumadine. So currently they're mining Zagounder, which has been a beautiful mine. But Boumadine is even bigger than Zagounder, which they're currently drilling. It's going to take them a while. So you see, he doesn't have that target out there for like 2028. So 2028 is really kind of, that's 27, late 27 or 28. It's going to take a while to get to that 145 because they have to build Zagounder. But once Zagounder, once they start construction on it, and it starts getting priced in, gets re-rated higher. So again, this is a 3-year bet on Aya.
Yeah, I'd put some of the other ones we saw before it now because of that fizzle back into what's been actually a reasonable year for silver. So it's been an underperformer since here, I would say, and so's First Majestic generally recently. Not when you bought it, you got it really near the. So that's great.
Let's give him one 15 bagger. Let's do one more chart. Let's give him a 15 bagger. Why not?
Yeah.
That's Guanajuato. You're probably going to
GU?
Yeah, GUAUJU, Guana with a J, JU. Guana, it's Guana, right. NAJ. Whoops, back that up. GUAN, Guana.
Oh, sorry. Okay, let's start again. You said NAJ. I got confused. Sorry.
No, GGU A N A J. There you go. Now, where you can use GC silver, GC. That one. Yeah, that one.
Yeah,
that one. Okay, so this one's a 15 bagger. So let's see what you can come up with. I have it as a 15.
My first comment worried me about is liquidity.
Oh yeah, this is you don't get a
low volume when you get a chart like this. That worries me.
You do not. Yeah, you do not get a 15 bagger easily. You gotta you gotta
penny stock your way. Yeah. There's penny stock risk with this.
We're talking about a big spec bet here, but if silver prices go up, this thing's gonna really rip. I mean, so that's why I'm saying you want a spec bet. We're giving them a 15 bagger, but we're gonna give them a spec bet. But the thing about the thing is about
this isn't one to put your family,
Yeah, this is a total spec bet. But if silver prices get to $50, this company gets healthy in a hurry. So they're a 4 million ounce miner. They're a 4 million ounce a year miner, and they have a market cap under 100 million. So this guy's got some serious leverage.
So the mines are open, they're functioning, and they're delivering 4 million ounces a year.
Yeah. Yes, but they haven't been making
the mines. Why are they so lowly rated? Because they knew. What's the story?
Because they haven't made any money and they've been diluting shareholders. And so that's been the problem. But now we got $38 silver, so they're making a little bit of money. And once we get above 40, this stock's just going to go absolutely bonkers. So it's a bet on silver prices breaking out in the next 6 months.
So this is your leverage play on silver. If you're a very big bull, silver.
Yeah,
They'll almost have to be clowns to not make insane amounts of money.
exactly. That's the reason why I bring it up here, because some people really like this kind of a bet. They really like this leverage. They love it. And so, okay, here you go.
Silver chip.
Here's your leverage play right here, guys. Get ready to make 5x in a hurry.
Well, I mean, if it goes from 28 cents to $6, that's pretty handy, because that's a 10 bagger to get to $2.80, and then you're still doubling that again. So that's a 20 bagger just doing the W bottom I've just drawn.
Exactly. It's got some serious leverage.
Because that's a log scale. To all those watching this, you have to understand that what a log scale has a habit of doing to a chart. We have to do log scale on big time frames for technically accurate reasons. But if I just take the log scale off, can you see that chart now? You can see how greatly unloved they became. That is the target. Now you see the target just on the page. Can you see that? Yeah. That's a big move. That now gives you a better sense for the scale of the move.
Yep.
On a W bottom, we use log scale. Okay, great. Don, this has been a great chat. I would like you to tell everybody how they can engage further with you. I would like you to do like you said, talk to your inside guy for me, give me a name, and I will share it for all our community members. Other people, they should consider becoming part of our community or subscribing to the Don Durrett letter. If you've enjoyed what you've seen, that's how you respect the man that brings the information. Tell us how people find you, Don, and give us your parting and closing comments.
Yeah, if you own some gold silver miners, then you definitely want to sign up for my website, goldstockdata.com. It's really to help people to expand their current portfolio. If you don't own any gold silver miners, then buy my book. And then after you read my book, you can decide if you want to get into it. My book is on Amazon, and you just go, yeah, so it says my book. So if you go to my website, you can find my book on Amazon. But yeah, thanks for bringing that up. And then you can follow me on Twitter. The final thing I'll say is, yeah, Don Durrett on Twitter. I actually have a mining group that has over 1,000 people on Twitter. You can ask to join it. But Snipers has been fantastic. I mean, me and you basically simpatico. And so this has been fantastic. I've really enjoyed it.
$199 for a year's work, guys. You don't get a decent dinner out with your missus and the 2 bottles of wine, knowing what alcoholics you all are. Excellent. It's great value. Excellent. Don, thank you very much again for your time. It's been a pleasure. It's been fun. And please follow up with me on that key point. And if I can get certificates in paper, I'm going to be increasing my exposure to miners. I think they're going to go absolutely berserker. And the right ones are shown to me technically, and with your fundamental filters, I've now got all bases covered. I've ended up going back to lots of charts that I've already drawn before, which shows us that we've both been finding our way to the same places, which is very comforting. And we've also had a lot of confluencing on targets. So thank you very much for your time, and good luck. To everyone else, hit the like button if you've enjoyed this. Give us a go, Don, go in the comments, and don't forget to hit the bell next time we do something like this, and tell us if you want Don to come back ever. Maybe you just think, no, he's terrible. Okay, I don't think that's the case. Thanks very much, Don. Have a great evening.
You too. Thanks, Francis.
Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.